So, as you can see here on the chart, for like 4 years, Bitcoin was in like the hundreds of dollar range. And it just kind of hung out there. Yeah, like maybe it bounced down, maybe it bounced up. But it was basically in the hundreds of dollar range for like 4 or 5 years. Then it went to the thousands of dollar range. And it just stayed there. Yeah, it bounced above 10 briefly. But it went in the thousands of dollars range. Then it went to the tens of thousands of dollars range. And it stayed there for 3 fucking years. And now we're coming to the end of it. What the f*** do you think is going to happen next? You think it's going to go to the $0 range? No, it's going to $100,000. It's fucking gone. 6-figure range, man. It's going 6 figures.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and it's Friday, so happy Friday. I don't have a great deal to say today. I just want to point at a couple of things, and the stuff I have to say about the charts kind of applies to all of the charts, and I could probably summarize it in one sentence, and that is today's weekly closes will be very important. I was just throwing this out there because a bunch of you were having this discussion in the comment section, and admittedly, it's a very small sample size, right? We only had 136 votes on Twitter, but I said if you had to guess, will we see diminishing returns for this cycle again, as we've seen historically for Bitcoin? And as you can see, the majority, although admittedly not a huge majority, think that we will indeed see diminishing returns. I put this same poll over YouTube, and you can see that we had roughly the same, slightly more people thinking that, yeah, that makes the most sense, that we will see diminishing returns this cycle. So kind of fits my idea, although admittedly, you know, only 298 votes here, and probably some of these are the same as who voted here. But this is not out of alignment with my overall observations and my overall experience when engaging with people on both Twitter and YouTube. It seems to me that most people almost have this, I want to describe it as PTSD from the last cycle, right? Last cycle, everyone, including me, thought we were going to 300k, and we didn't, right? We topped at 69k or whatever the number was, around that neighborhood. And so I think this time people kind of have that memory. They're like, oh yeah, well, last time everyone was calling for hundreds of thousands of dollars and we only got to 60 or 70k. I personally think that this is where opportunity presents. When everyone is sure of something, then typically markets move to upset a bunch of people. Now, it's important to point out a lot of this is anecdotal, of course, but the real reason I think we exceed people's expectations and we don't top at 70, 80, 85k, even 100k, I think we go north of 150k. And most of this is based on two things for me. The Elliott wave counts suggest that we're already in an early parabola. It's just most people haven't figured it out yet. There's also, as you know, if you're familiar with my work, this whole cycle idea that tells us we should expect a slightly earlier top than normal. And then you've got the really experienced cycle traders in the room like Bob Lucas that say that the most probable outcome from his perspective is that we have this big blow off top and then we need to waste maybe 4 to 8 years, another 1 to 2 cycles where we do not exceed the all-time highs. And if that is going to happen, if that's going to play out, and I'm not saying it is, but I'm just saying if it is, then we really need to see a much higher number, right? That's how it works. We put in a silly overvaluation. That's the only way this would work, right? We have to exceed fair value price by orders of magnitude, right? Which means we need a much, much, much higher top. We need to get so many people to come in and pay a ridiculously overpriced amount for Bitcoin. And that would be multiple hundreds of thousands of dollars. Once they've come in and all the retailers got that and they've paid these multiple hundreds of thousands of dollars, you know, then we into this big, long, drawn-out period where we waste a couple of cycles building another base. We'll probably get to draw down even more than most people think, because there's another thing that's a factor here, and that is people seem to think that just because the ETFs are here now, we can't have an 85 or a 90% drawdown. And to that I say, complete nonsense. And the reason I say that is there are plenty of ETFs that these huge providers like BlackRock and Fidelity manage that have indeed drawn down 90, 95%, some of them even 99%. So just because BlackRock are here, don't think they care, right? If Bitcoin's price crashes, their job is to track the price of Bitcoin. Their job is not to say, well, you know, buy this ETF and you're only going to make money. It's going to be up only forever. That's not their job. Their job is to track the price of Bitcoin. If Bitcoin's going to draw down 95%, then the ETF's going to draw down 95%. So I don't buy that. I do certainly buy that we can have this huge, huge, huge blow off top move, and then we have to spend a significant amount of time before that all-time high can be achieved again. And if you just look at gold, we've kind of seen this, right? It had this huge run up to the 2000-ish the first time, and then it spent 12 or 13 years putting in this massive cup and handle pattern. And right now, again, 12, 13, 14 years later, we are finally pushed up against that prior all-time high. I know we've exceeded it slightly by $100 or so, whatever, but generally speaking, you know, gold put in its all-time high. In fact, let me pull up a chart for you. Here it is, right? This all-time high here was in 2011. And I know the price of there was like 1912, and what are we at today? Yeah, $150 higher. Okay, great. But the point I'm making here is this all-time high. You know, this has been a long drawn out 12, 13, 14 years now getting on for, and we're only $150 above this price right here. Even the prior all-time high that was just a stop liquidation, this big wick, only made it to what, 2150, okay, above this wick here, which was 1918-ish. So this is my point, right? We could indeed have this huge blow off top. We could indeed have this massive parabola that goes way higher than most people are ready for. But if that were to happen, then we would probably have to waste a good 1 or 2 4-year cycles consolidating, building a base. And then, of course, Bitcoin can go on to do Bitcoin things once more. So that's kind of my thought. My thought is, if you're in this camp of people that thinks diminishing returns are guaranteed or the most probable outcome, I just disagree. And that's fine, right? It doesn't matter if you're right or wrong. It's have an expectation, have a hypothesis, and then work from within that framework. If we top at 85 or 95k, if we have a parabola that breaks trend lines and starts to print failed daily cycles, then I'll spot that a mile away. I'll hold my hands up and say, fine, that was the top. Okay, no problem. I'll sell my Bitcoin. But anyone in this camp of people should probably at least be open to a higher number than, say, an 85k top. So that's my thoughts on that. This is very interesting indeed. That when it comes to the Fed cuts, it's all about the backdrop. This is key. So rate cuts with a recession is bearish, and rate cuts with no recession is bullish, according to the data. But I actually think that, as I've been very consistent in saying, something breaks this time around. I think we do have this recession, this global deflationary bust. And if you take a look at this, right, the US banking system is no longer sound and resilient. That was the Fed's own words, okay? They struck through this sentence. We can see this in the KRE chart, okay? The regional banking ETF. Look at that at the hard right edge, okay? Warning signs. That is a big warning sign. Also, we're starting to see property losses triggering 20% drops in a Japanese bank. And this was on the 1st of February, only for a day later, this thing to drop another 19%. Again, because of the commercial real estate exposure, which is declining. All of this, of course, against a backdrop of a potential 4-year cycle low in the S&P that I covered in this video here, called Can I Actually Predict the Unpredictable? And of course, all of this neatly feeds into this idea that we're in the middle of putting in a blow-off top rally that then culminates in a global deflationary bust and recession. So it's to be determined. It's still a hypothesis. Of course, I'm open to being proven wrong as always. But as it stands, it certainly seems like something is going to break, something is going to trigger a recession. And under those circumstances, we typically see the rate cuts marked here in white. Do they cut here? Are they forced to cut here because something is broken? Typically, that has bearish connotations for risk assets. There is one concern of mine about this idea, and that is that this is starting to become quite commonplace. I'm starting to see a lot of people point at the middle of this year and say there's going to be a bust, there's going to be a meltdown, there's going to be a recession. This seems to be almost becoming crowded now. And I wonder if it is indeed crowded, and therefore what we get is a pullback into that 4-year cycle low and then a resumption of a primary uptrend. I wonder if that is something we should be open to. Or is it the fire analogy, right? Are we just stood here looking at a forest fire that is getting bigger and bigger, smoke billowing out of it, watching the flames spread from tree to tree to tree, and the fire grow larger by the moment? Is that what we're looking at in the banking sector? So is it really crowded, or are we all just sat here watching a forest fire spread rapidly? Let me know what you think in the comments. Maybe I'm way off. Maybe they're just going to print a bunch of money and prop this whole thing up and continue the pony show. And if it does, then that is super bullish for Bitcoin. Bitcoin has always been the single #1 best asset at sniffing out Fed printing. As soon as they start to print, Bitcoin knows, and Bitcoin does Bitcoin things. Any kind of printing, Bitcoin is going to sniff out and Bitcoin is going to respond well to. But the other thing, and I've mentioned this a bunch of times, that's worth considering is typically they don't print with the stock market at all-time highs, right? They wait for something to break, something breaks, it crashes, and then they announce the print to save it and stop it from going to zero, and they prop it back up again once more. So probably some short-term pain before they turn the printers on. Never, one day at a time, and we'll see what the market can give. Over in the world of Bitcoin, of course, Argentina is starting to make big changes towards being pro-Bitcoin, and these changes include the alleged abolition of the central bank and the removal of tax on Bitcoin and cryptocurrency. We're also seeing Plan B's model, okay? Now, I have been very, very, very vocal about this, that I don't think this thing is broken. Now, all models are broken, I understand that, but I do think this is one of the best that we've got. And people are very quick to come out and bash this model. But are we looking at the same thing? Look at the grey, the stock to flow model behind here, okay? And then look at the price chart, which is the rainbow coloured dots. What do you see? To my mind, as far as I can tell, It's not that far away. And I often make this point. People say, oh yeah, look at the deviation here. We fell way below the grey. But no one had a problem when we deviated to the upside, right? Not only that, if I get rid of all my squiggles, what we know for sure is that we've just closed January at $42,500. That's this blue dot on the hard right edge. There are 3 more blue dots to go before we start to print the yellow, orange, and red dots. Historically speaking, there is no reason to believe that we're not going to be doing this, okay? I know a lot of people, for some reason, seem to think we got to do this next. I don't see it personally, and it's funny because I know how markets work. I know how sentiment works. If these dots do start to show up where I expect them to, somewhere in this kind of neighborhood, then all of a sudden, the people that were the most vocal about saying Plan B is full of nonsense and that Plan B's model is rubbish, they're going to be right back here singing this man's praises and saying that they were back in the stock to flow model the whole time, okay? So anyway, it is what it is. It's a model. It's broken. You know, we're taking one closing price at the end of every month and plotting it against a stock to flow model based on the amount of newly issued Bitcoin and its tendency to decrease over time. How accurate do you really want this thing to be on a day-to-day basis, right? It's an open market. It's full of manipulation. The people that are so angry about this model just need to take a step back, relax. Everything's going to be okay. And lastly, before we hop into a few charts, ARK have increased its optimal Bitcoin investment allocation to 19%. That is triple the recommendation from 2022. So 19% is massive for an institution like this. Numbers, if we can just get to a 1 or a 2% allocation, are very, very favorable for a 6-figure Bitcoin price. So if we can get anywhere up to this level, then nobody is bullish enough. With all that said, let's take a quick look at the charts, okay? Here's VNQ. Haven't covered this in a little while. Look, we're short, we're strong, and we'll see what the market can give, right? Rejection at resistance, trendline breakdown. That was the entry for the short. And if I flick this thing onto a weekly chart, drag my fractal across from 2008, we are starting to deviate away from that. But of course, the fractal was just for illustrative purposes. We will see. Given what I've been showing you about commercial real estate blowing up and causing damage to banks, would this surprise me if we start to accelerate to the downside? No, that's indeed why I'm short in the first place. All the while we are contained below this downward sloping red resistance line at the top, then I'll continue to push this short. If we were to break out of here on daily closing basis, then I will, of course, exit this position. The dollar, the DXY, has indeed broken down from this upward sloping red support line. So far so good. Expecting this yellow squiggle to play out. We need to get below this low from back here that I currently have marked as the 3-year cycle low. If we can close below there, we can say for sure that this isn't the 3-year cycle low and we're going to have this risk on moment into the middle of the year. At least happy days there. Bitcoin breakout retest hasn't yet confirmed a resumption by taking out the prior high from back here, which is at around 43,000 and change. The failed cycle, of course, tells us to expect one more rollover. Can we get it? That is to be determined. We should know for sure within about 7 trading sessions. Gold still grinding its way up, possibly going to be looking for shorts now. I'm actually going to get rid of this because we're too stretched in the weekly cycle for me to be looking for longs at this point. And as I said at the start, look, closes are going to be important. So far, we had this big FOMC shakeout, but as I was saying, right into support. So far, bounced off of support. Now, if we can close above this upward sloping red support line, then the thing is bullish, and it's very, very bullish. Inversely, if we close below that, that will be a very significant warning sign that tells us to be open to more downside. It's the same with the NASDAQ, right? Look, perfect touch of support and a bounce. If we can close above this, then everything is bullish, and the same is true for the Dow. But again, close below these supports, and especially on a weekly closing basis, that will be significant and to be of note. It would probably tell us to expect further downside into next week. And here we go, the Russell 2K, again, bouncing off of support. So hold the support into the close for the week. Happy days, long and strong. Close below that, things could start to get ugly. As always, I'll come back tomorrow over the weekend, examine all the closes, do a deep dive TA, reveal all the live positions and how we plan to handle the coming weeks going forward. I'll also be putting out a members video as always, and we'll be going over a bunch of those crypto related equities and miners, especially ones that aren't listed here. Other than that, pushing all trades, and we will see how the closes look. Till next time, enjoy your weekend. I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.